Trust is the foundation of progress. Yet in a world of rapid technological change and growing complexity, it often feels like the missing piece. I'm Matt Yarger, and I've spent years working at the intersection of sustainability, technology, and innovation. Through this podcast, I sit down with leaders, visionaries, and changemakers to explore one key question: what builds trust? From global systems to personal decisions, we'll dive into how trust, or the lack of it, shapes our world. Join me as we uncover insights, challenge assumptions, and explore how we can create a future built on trust. Let's get started. Welcome to the Future of Trust, where we explore how trust is built, broken, and rebuilt, and the systems shaping our world. I'm your host, Matt Yarger. Today, I'm joined by Matt Ober, an investor and operator with experience across hedge funds, alternative data, and early-stage companies. Trust rarely fails all at once. More often, it arose quietly. The numbers still look right, the dashboards are green, and the narrative holds, but something underneath does not sit right, and the cost of getting that wrong only becomes clear later. Matt Ober has spent his career inside those moments. He did not enter finance through a polished front door. He answered phones at Bloomberg. He found his way into a hedge fund role through Craigslist. Early on, he learned that access does not equal judgment, and that information can look precise while still pointing you in the wrong direction. At WorldQuant, Matt helped source and operationalize alternative data across dozens of countries. He saw how quickly convincing data can outrun trust and its own validity. Later, at Third Point, he worked alongside activist strategies where timing, conviction, and confidence in your inputs directly shape outcomes. When trust is misplaced there, it's not theoretical, it is measurable. Today, through social leverage, Matt is often the person founders call when things are not going well. And sometimes when there is no deal at all. Those calls are not about optics or positioning, they are about pressure, honesty, and decisions that do not come with clean answers. He stays in those conversations because to him, trust is not transactional. It accumulates through consistency, availability, and telling the truth early. This episode matters now because more decisions are being made with more data and less certainty. The systems are faster, the signals are louder, and the consequences of trusting the wrong thing are harder to unwind. This is a conversation about what holds when confidence is easy and trust is not. So let's dig in. Matt, thanks for bearing with me through that. We had a great intro call. It was really interesting kind of getting to know your background, how you got into the space and what you're doing now. But to kick off, you had said you grew up as the oldest of five with parents who didn't go to college, a father who built his own consulting business. Is there anything that you were responsible for that you probably shouldn't have been in hindsight? And just like, what was that dynamic life like? What were your foundations and trusts and how you were raised that like pushed you into the path that you've kind of explored since then?
Yeah, I think, again, thank you for having me. I think, my parents obviously, they went to school, but maybe not the traditional, you go to high school, you graduate, you pick a 4-year college and, the direction you see a lot these days, I guess, especially in the coast living, New York and California. I mean, I think for me with being the oldest of five, like you tend to think like you've got a lot more responsibility early on. I think I have 3 kids now, and I kind of joke with my wife, I've already helped raise 4 before this, so I also think that you see the need to support the family. You have your own job, hustling to figure out things on your own. You don't have as much attention when you have such a larger group. But the flip side is you see the importance of family and building cohesive teams. And I think I've learned that as being a manager over time also, when I've had big teams underneath me, of just like building the right team of close people and loyalty.
So where'd you call home growing up?
I grew up in the Bay Area. So like East Bay,
Okay.
outside of San Francisco, born in San Francisco, grew up, call it 45 minutes to an hour east, Concord, Walnut Creek area.
Nice. Okay. So you got to enjoy all the benefit of California, its coastlines, its mountains, and everything else.
Exactly. Did my growing up there, spent a lot of time in New York after college, and now settled down in San Diego. We got the beach and sunshine.
Where'd you end up going to school?
Cal State University, Chico. So about 3.5 hours north of San Francisco.
Okay, so you've really just kind of used that as your hub all the way through college, and then after college, it pulled you into New York for a while.
Yeah, first started at Bloomberg in San Francisco, working early hours, so like a lot around like market hours, and then transferred with Bloomberg to New York and spent 12 to 15 years in New York.
Okay, that makes sense. So you said your parents did go to college, but not the traditional path. What was that kind of path like with them?
I think that they did their own thing, had jobs, went back to school. My dad ultimately starting his own like computer consulting firm. I remember that during like the 2000s bubble and him working on things that, were supposed to break when, you know, Y2K and everything. And my mom, not working when we were young at the beginning and then, going back to work and working as a buyer in like large medical companies.
Mm. Did you get to work with your dad on his computer consultant company too?
I did. I feel like he always had a lot of side gigs as well. Like we were doing printing of time cards. We had a candy machine business. And then he had his own larger computer consulting firm that was, had employees as well.
Okay. Yeah, so you got to that was probably your entry into, data systems and technology is really looking at what he was working on and figuring out your early fit there.
Yeah, I think that's right. I mean, I think I never was really a coder or somebody that wanted to sit behind a computer all day, but definitely got to see his work ethic and uh, what he was able to do.
Okay. Is he still working in that same kind of space or has he retired?
Retiring in less than a month.
Wow. Congrats, Dad.
Yeah,
That's exciting.
excited.
All right. So what was the transition like for you kind of coming out of the Bay Area mindset going into Bloomberg and New York then?
My parents grew up in New York, so I think for me, once I kind of got into Bloomberg and decided that I want to be in the financial services space, thinking I wanted to work at a hedge fund or in a bank, I think you quickly realize San Francisco is not the place to do that for a career. It's much more of a retired Wall Street, and so Bloomberg offered me the opportunity to move to New York. And I think after discussion with my family, it was like kind of a no brainer. I wanted to
Okay.
go that direction.
That makes sense. Um, so is there anything from that kind of early stage, childhood through college into your first job that sticks out where it was a moment when your trust was either broken or like strengthened? And that's really kind of been fundamental to how you make decisions or trust different systems or people or companies today?
I think the trust was that the broken or the learning was more from that. Once you start out of school, everybody kind of starts over, and
Hmm.
that like nothing really matters, and like the work, it's a lot of work ethic that you have to have starting day one again. I feel like when I got to Bloomberg, like what you learned in university, was really just like to check the box to get you in the door for a job. But that's when the
Yeah.
real learning and work ethic and like competition, if you look at it that way, really begins. And I
Yeah.
think like
Okay.
maybe you're not really given that insight as a younger person.
Yeah. Yeah. I mean, I think we've all kind of seen that where we spend all this time and energy going through college or university and that's going to be what we do. And we think it's just going to like flow so seamlessly. And then you get into your first job and you're like, wow, everything I learned in college or a lot of what I learned in college was kind of useless and not relevant to what I'm doing today at all.
I mean, I think you grow up in college. Listen, I went to Chico State. It was a great experience, great,
Yeah, I'm sure.
city to live up there. But I can't say like I walked out of school there and it was like any bit helpful for like the company that hired me. Right. Which is
Yeah.
why I kind of say to people like, there's a value of going to a larger firm that has training programs and teaches you what it means to have a job versus jumping into smaller organizations. I mean, everybody has
Hmm.
their own path, but I think that Bloomberg was a good stepping stone for me.
Well, yeah. I mean, I think anybody would be happy to say that their first big step was at Bloomberg. It's a great organization to work for, and they have a huge network and reach that I'm sure has really situated you well.
Yeah. Great alumni
What
network as well.
Yeah, would you what was your degree in college again?
I studied finance and international business.
Yeah. Okay. So the finance of course kind of flowed into it really well, but I'm sure the network is what helped you get into Bloomberg too, huh?
Actually for Bloomberg, I think I just applied cold online.
Oh,
It
wow.
was the time back then, like, I think networking is obviously the most important thing these days, in my opinion. But I think back then, a lot of people were just applying online coming out of college. And so I think I
Mhm.
just, was firing off a few dozen applications a day with a little bit of a hope and pray strategy coming out of school.
Yeah, okay. Yeah, I know I mean, you said you've got 3 kids, I've got 2 sons, and I'm sure eventually we'll have more than 2 sons, at some point, depending on how my wife decides to make her decisions. But, I didn't have a very strong college experience. I was military, so I got most of my learning on the job and through programs at through the federal government and those kinda things. And I really just I wish I would have taken the time to go through a real university, like brick and mortar, and been there because hindsight, almost 40 years old now, the network is so valuable, but you only really get to build trust with the network when you're in person. Like doing an online degree, you kind of check the box, but you don't build relationships that way. And
Yeah.
so I think just a lot of people I've talked to have seen that foundational trust element come from taking that step outside, figuring out who you are in university and college, and then also building those relationships and seeing what kind of path they help determine for you.
Yeah, I think there's different levels of that too. Like for me, I have a great group of friends still from Chico State that we stay together, where we have a fantasy football league that probably keeps us all close. But I don't think Chico, and I'll say this as, I sit on the board of governors at Chico. And I always say, like, our alumni network isn't like the Ivy Leagues or like the University of Michigan. Like, I just feel like those are different levels of networking where like
Mhm.
people get jobs because they're like, oh, you're an alumni of XYZ. We've got alumni from there. Like there's just a different level. Like I don't find that with Chico. It's just a tough thing to build. Like you need
Mhm.
a different alumni relations type of setup.
Yeah, yeah, I've learned that over the last few years specifically. It's just like there's a big difference in going to a university of whatever state or, the your standard state colleges and universities or going to Harvard or Yale or
Right.
Princeton or,
Especially for like
Berkeley.
MBAs or graduate degrees, right? Like those, like you're paying, the joke is if you're getting your MBA, you're really just paying for the alumni network.
Yeah, I wish someone would have told me that joke a lot earlier because it probably would have changed some decisions I made on my educational
Yeah.
pathway. But I've seen it play out like directly just in like what we're building at Demia. We've got guys from Harvard and other universities, and just the access, the ease of access that you get with like that alumni network and finding your kind of path and helping build up and bootstrap things can it really just lowers the barrier of entry for you as a founder.
Yeah.
So, during your intro call, you'd shared a story about answering phones at Bloomberg and then later finding a hedge fund role on Craigslist. How did that happen?
Yeah. At that time, Bloomberg was hiring everybody into what was called GCUS or Global Customer Support. So you started there out of school, you essentially answered the phone. So that might be somebody
Mhm,
asking you about, how do you use the Bloomberg terminal to find, interesting stocks or, do valuations on options, or it might be somebody complaining about the radio or the magazine. Like it was kind of a wild card, and we just answered the phones all day. And they brought you through the analytics department, and then you learned the terminal, and eventually you were supporting hedge funds and banks, or selling, or doing analytics. I think I quickly realized that I loved the markets and I was good at it and the fast pace and everything, but I wanted to be on the other side of the Bloomberg terminal as a user,
mm,
working within the hedge fund or working on a trading desk. And so I spent probably 2 years while at Bloomberg, the last 2 years of Bloomberg, just applying and interviewing. And
hmm,
I ended up looking on Craigslist because I think at that time, small hedge funds and just like finance shops were listed there, and probably half of them were fake or, like, old like chop shops, selling penny stocks. But there was a job listing and it was really around like leveraging data in a hedge fund. And I applied and, long story short, it ended up being WorldQuant, which was, at the time a smaller quantitative hedge fund within Millennium Partners, which is started by Izzy Englander. which, is a massive firm. And Igor had this vision of, if you could consume more data than anybody else in the world, we could manage more money. And, now today, company has well over 600 people and managing excess of, billions and billions of dollars.
Yeah, absolutely. So what do you think was it that kind of pulled you to switch the side of the terminal that you were working on? Was it just a different kind of energy, or what was so enticing about it for you?
I think it was partially competitive mindset of I didn't feel like the guys on the other side of the terminal were smarter than me. And I also knew they're probably making you know, I think that if you like the markets and you want to be in finance, I think one of the, aspects of hedge funds is there's unlimited upside. And I think
Mm,
I quickly realized at Bloomberg, during review process, to be like, okay, you're top in your, class, like hiring class. You've been here this many years, you're a 10 out of 10. This is your pay. And this is what it's going to look like for, the next 10 years. If you stay here, you're in this little grid that HR has created. Whereas if you're in a hedge fund, we made $1 billion this year, the firm gets to keep 200 million of that. The rest goes back to the investors. And it's a merit-based system. I don't care if you're
hmm.
24 or 42. And so I think for me, it was, not a lot of seats there, but I didn't think that anybody I had met on the other side of the Bloomberg terminal was that much better than me, maybe outside of just having a degree. And so I think it was a competitiveness that pushed me that way.
Yeah, I think it's competitiveness, and then having just what sounds like a really strong sense of trust in yourself, because you knew what you were capable of, but it sounds like you felt like you were kind of being stifled at Bloomberg. So like
I think it was just
having a
I
place
mean,
where the cat.
yeah, I think also this is probably any big, organization, right? Bloomberg had tens of thousands of people, which is just
Yeah, it's hard to stand out.
I didn't think that because of your age and years of experience, that should be a factor in the job you could have or the,
Hmm.
the compensation you should be paid. And I think in reality at big corporations, you know, we do promotions every 2 years. You can only move up 10%. Your compensation can't move up more than 10%. I think, you know, in the hedge fund world, for better or for worse, there's not really a concept of HR. I mean, there's HR at a lot of firms, but they're not there. There's a lot of times HR isn't involved in the compensation discussion, right?
Hmm.
Reality is if you work harder than the guy next to you and, you generate the idea, or you do X, Y, or Z, I think Igor, the first time I met him, you have your standard interview and they ask you at the end, do you have any questions? And I said, what's the goal for you over the next 5 years? Like some generic, question you'd ask. Right. And his answer was to make money. And I think I kind of looked at him and I was like, no further questions.
Yeah,
We're on the
very
same page.
refreshing
Move
and
on.
like
Yeah.
blunt. Like this is why
Yeah.
we're here. So
Yeah. There's no greater purpose at a investment firm, right?
yeah,
We have one job.
yeah. If you're not spending your time making money and generating wealth, then you're doing the wrong thing.
Yeah. Listen, it's not for
What's
everybody, right? There's no greater good. There's no, it's not a philanthropic type of job, but
purely transactional?
yeah, exactly.
Yeah, but sometimes we need that. What does, just out of curiosity, there's no limit to the upside when you're kind of transitioning in that kind of role. So what do the employee structures look like for you making that transition? Is it like commission based? Is there a cap? Like how's that kind of work?
I mean, every fund is different. Every structure is different. I mean, not everybody is in the front office. Not everybody's a
Hmm.
trader or a PM. A quantitative firm has a lot more, everything's measured, right? By numbers. Everybody gets X% of what they create. I think WorldQuant was unique, even with me not being a portfolio manager. If I contributed to this alpha that was used in this portfolio and then this much weight, we generated this much money, I could make X, right? So everything was math based. And obviously there was some, for the non, researchers and PMs, there was, a little qualitative that was done, right? I think in a more traditional fundamental long short place, you kind of just wake up at the end of the year, you hope and pray, but like the numbers are much bigger, right?
Yeah.
Again, if the firm makes 200 million and you have less than 100 people, top guy takes half of it. There's a lot of there's a lot of money left for everybody else. Granted, like they're paying the best people, right, the top money, and it's also
Yeah.
done probably by a percent and how much alpha you brought, and then there's like this small sliver of like how good are you culturally, right?
Yeah.
But I don't think people value as much the management and like everything outside of the performance, which also makes it a tough environment to work in.
Oh yeah, I'm sure it's very cutthroat, I'm sure. But I like the fact that it's based on the data, not, who knows who and what have you. It's very merit based. I think everyone hopes at some point to work in a merit based system because then they see like, oh, it's up to me. But other people might not be that way. They might want to just be like, hey, I want the stable and the security and the et cetera of Bloomberg because I don't maybe have that sense of trust in myself to deliver at the scale that those kind of opportunities look for.
Yeah, I mean, I think politics at a firm like Bloomberg or any big corporation is different. I
Hmm.
think politics at the hedge funds definitely exist, so it's not all
Hmm.
merit based, right? There's definitely a lot of like I used to always say like it's a Game of Thrones, people trying to like take your job or drop a piano on you at all times. So that definitely
Mm,
is happening. I also think that you're right. Like you have a job like at Bloomberg, you do your job, you check the box, you get your vacation days, you have all the perks that you have. Whereas a hedge fund, like there's a little bit more expectation that you're always on. You have a kid, like a week of paternity leave seems like a lot, right? And then I also think like you
jeez.
know they the expectations of just like being available is just 24/7. Shit hits the fan. Like COVID happens, what's happening right now with the war and Iran and everything.
Oh
Like
yeah.
you got to be on and available whether you're on vacation or you're not on vacation. So
Yeah. The markets don't
I,
wait for anybody.
right, exactly.
Yeah. So early on at WorldQuant, you were working a lot on the sourcing and the operationalizing uh, with that data across a few dozen countries, from my understanding. So, was there an instance where that data really looked convincing, but just qualitatively you didn't really trust what you were seeing?
Yeah, I mean, I think that happened a lot. Like, we were buying unlimited amounts of data. And I think, you know, trust but verify, right? Like, there's a
Hmm.
reason why we would trial the data, run all these back tests, and then have this like, well, this looks too good to be true. And so, like, we would never start trading with the information, even if we started paying for it. We'd probably let it
Yeah.
run out of sample, which means like let the strategy paper trade for 6 months in some cases,
Oh
right?
wow.
And then be like, okay, this just fell off a cliff. So all this data was fake or, it's not point in time. So that's the game you kind of play. And, you also like ask a lot of questions. We did a lot of like analysis on the people and who's building this and what this company is. Maybe you trust a FactSet or a Bloomberg more than you trust like two guys in the middle of Eastern Europe who started a data company like a year ago that you've never heard of.
Yeah.
But that doesn't mean
Oh,
that
that's
that data
interesting.
couldn't be valuable. It's just, we're going to be a little bit more cautious on like pushing it right into production.
Yeah, there's still a lot of due diligence and testing that you have to do. It's not just like, oh, we got a new data source. Let's run with it.
Yeah, exactly.
What's it? So, did you source a lot of the new kind of data sources that fed the models that y'all use?
That was our job. I mean, my job at that point was at first it was me with one other guy, and then I ended up building out a team of a few underneath me. But it was, how do we consume as much data as
Hmm.
possible and do 100x more every year?
Mm.
And, we have a team of the best researchers in the world. We can automate everything behind us. We need to make sure that, we're testing thousands of new data sets a month, spending
Wow.
excess of $100 million, buying, be at every event, go to any country, do whatever it takes. So, yeah, I mean, a good week, we'd be having, back to back meetings from, 7 to 5 with vendors that were selling stuff.
Yeah, so you really built that kind of data sourcing and foundational program from the ground up, it sounds like.
Yeah, it was like almost like a factory line, like from finding data to testing it to contracts and agreements, all the way through to production to measuring how good it does to let's build our own web scraping team because, we can collect our own data to why don't we have our own venture arm? Should we invest in these data companies that are actually valuable so we have upside in just the company itself? There's all these different aspects. And, I think it was a great environment because, Igor was like, if you're successful in, producing, like, let's try everything, right? Like, let's do a
Yeah.
venture arm. WorldQuant has a great ventures team now. I was there as part of starting it, and it was a great idea. And, call it 10 years later, they're still a great firm over there running like private on top of the publics.
What does that look like to run venture from there, and like who are you pulling into the venture side?
Venture there was more, I wouldn't call it corporate venture, but like we were investing in data and technology companies, and most of the sourcing was like, hey, we're using the product and we like the team that's built it. We know they're going to raise money. Why don't we own a piece of it? Because like it's valuable for us, but
Yeah.
we know it's going to be valuable for others, right? Or we know we bring credibility when they raise as a client and an investor. So maybe we get even a better discount, or maybe we can get the data for
Hmm.
free and forever because we're going to also be an investor, right? So there's like
Yeah.
a ton of benefits.
Okay. Yeah, that gives me a lot of ideas for how things are going to work from our perspective. So I already find that as a valuable insight. Um, were there specific kinds of data that proved to be more valuable?
I mean, I think in a quantitative environment, it was depth, breadth, and speed, right? Like if
Hmm.
you have 10 years of history and it updates 5 times a day, covering 5,000 companies with 30 plus data points, you have this
Mm,
grid of data. I think that's more valuable than, something that updates monthly and only has 2 years and covers 50 companies. So
yeah.
breadth and depth and speed and just like really insightful things like that.
Yeah. Yeah. So like tracking commodities and like production and those kind of things, or
Yeah, like
impacts, or
product segmentation of revenue for every company globally. Like, how do you
mm,
think about the revenue for a company like Amazon across all their products? And can you see the revenue numbers? And then can you see the products and how those products are priced? And then how
yeah.
much margin they make off of every product? And now expand that across, 1,000 companies, updating all of that on a daily basis or intraday.
Hmm.
Price of toilet paper for an Amazon basic, like there's like, you're really nuanced, but if you have a team, and back then, like obviously AI and data capabilities were different, but like we were probably top tier in the world and being able to
Yeah.
handle things. We could handle as much as you had. I mean, I remember getting Bloomberg's news feeds that if you've ever been on a Bloomberg terminal, it's a crazy amount of news, and just turning on the pipe of their news feed and it taking like a year just to figure out how to like consume it because it was coming so fast.
Yeah.
So
That
think about
makes
how
a lot
much
of
money it
sense.
costs just to get that feed. And then you don't even know how to use it for a year because it takes up so much compute power and memory.
Yeah. Yeah. So you got to learn how to build the infrastructure to support it and parse it and translate it into
Yeah. And
something
listen, I'm not,
actionable.
my whole thing was like, I know we had the smartest people in the world that we were hiring. So like, wasn't my job to have to figure out
Yeah.
those nuances. I mean, maybe push a little bit when I felt like we weren't getting things done, or, make sure that the top tier knew that like we were wasting money because we haven't figured it out yet. But like, there was definitely a smarter group of individuals there that were getting the actual
Yeah.
infrastructure built.
No, I mean, that makes a ton of sense. And I'm just like, I'm endlessly curious about this because the data side and like securing the data and trusting where it comes from, that's really everything that I'm dedicated to, is like, how do we trust that this data is good and that it's useful, and then create value from it? Really simplistically. But you hear things all the time like data's the new oil. People have been saying that for like what, 15, 20 years now.
Yeah, and now
But
it
no one
feels like
really,
maybe it is, right? With AI, maybe we're there finally. I grew up in like
yeah.
the quant world of alternative data, and then it was quantamental. And now I feel like alternative data is just data. And now in the AI world, it's like data is like people are finally realizing it. But then others are like, well, data is easy to get access to. But I think we're finally realizing the proprietary moats on data is a real thing. And if you're going
Hmm.
to build in an AI world, like only a few modes that you can create, which is distribution, access to clients, and like data.
Yeah. Yeah, exactly. So like how do you build that moat? Is it technical or commercial? Is it contractual? Is it IP? Like how do you
Right.
protect it? And then how do you have access to things that other people just don't have access to?
Hmm.
And then, what is valuable from it? So there's so much when people talk about data, but like no one really goes into detail with it. And of course that's on purpose. They want to protect their own IP and everything. But I think there's a lot that people can learn from your experience because you've been a big consumer of data. And a lot of people don't get to talk to, who are the big consumers and what kind of data do they need and how do I create value from all these sensors and satellite feeds and other things that I could be tapping into. And is it like the niche data that's hard to get access to that's more valuable, or is it just scale? Is it the breadth and I need 5,000 different companies, you know?
And it all depends on the client, right? What a
Mhm,
quant firm needs is very different than a traditional investor versus a corporate. Quants
mhm.
might want raw data to just do the work themselves, even though they probably want you to give them the answers. If I'm a corporate, I want the answer, right? And everybody else is somewhere in between. So I think figuring out how to productize and what your go to market and who your ICP is the most important.
Yeah. Okay, that's super helpful. So kind of switching lanes a little bit, going into what you're doing now, you described yourself as a person that founders can trust and that they often call, even when social leverage isn't the one that's invested in their organization or their startup. So, is there a moment where, like, telling the truth risked losing the relationship from a founder perspective or from a personal perspective?
I mean, listen, I think the social leverage is always been, we want to be that first call for our founders, but we also have a
Hmm.
larger network. So we're helping a lot of companies that maybe have been in and around the firm that we just, we didn't invest in or for one reason or another, we know them. I think we'd rather be honest, somebody says firm but fair than sugarcoating it and
Yeah.
not. So like, I think you risk the trust if you aren't honest. And so you might as well be. And if they can't handle it, like, listen, it is what it is. Like it's even like when somebody pitches us and we don't invest, like you give the feedback, don't think that we're the right fit. Like it is what it is. I mean, it's like dating, right? Like didn't work out. The other side wasn't interested. Like there's no point of arguing it. Like we should all just like accept it and move on.
Hmm. Yeah. Yeah, that makes sense. I mean, I know we talked about this. I think we had this initial call in like December. I think that was around when our intro call was, or it might have been January. But I remember that point specifically from that initial discussion where you're like, yeah, we had a founder who was just scared to talk to us. And then he finally did. And it turned out so much better because he did. And I actually took that action on it because we've got investors, of course. And I was like, man, I need to talk to our investors about what's going on a little bit more and like really just get down to the details and share that with them. And it made such a huge difference in the relationship because it helped open up the trust in a level or in a way that it wasn't open yet. And so now like they understand a lot more of the intricacies, but they also have a lot more faith in like what we're doing and understand why we're doing it and the difficulties that come with it. And they're helping guide us through that in a much more hands-on way. So I think that's just like one note on that point is like don't be afraid to talk to your investors about something if things are hard. Like you can't always give them good information, but talk to them earlier
Yeah. I mean,
because it
it's,
can
yeah,
help.
yeah. It goes back to my WorldQuant Ventures days and just like some founders just not being good communicators about bad news and kind of like, I don't want to say lying, but like only telling the positives when there's all these negatives going on. It's like, you never know which of your investors could help or do something different or has a connection or a network. I think one of our investments is a company called Beehive, and the founder, Tyler Dank, writes openly about his company. So he's building in public, right? He shares everything
Yeah.
from revenue to headaches and everything. He writes a great newsletter, and a lot of it is shared for founders, which is just like do a monthly update. Even if you don't have a board or investors yet, keep yourself honest. And
Yeah.
like the amount of things that the investors can help with doing a monthly update. And I always tell this to our founders, like, I don't want just like a couple bullets on like the numbers. Like, what's your biggest paper? Like, what do you need help with? The same thing about like a board meeting. Send the
Mhm.
board deck, but we should be spending the board meeting figuring out something that's a pain point. Like, this is
Yeah.
your time with us. We have limited time. You have limited time. If there's a topic we need to figure out, like, let's dive into it now
Mhm.
versus like using this time to walk through a pitch deck, which we all should have read anyways.
And a lot of times you get in the call and they probably didn't have a chance to go through the deck anyway, but they've got it. They can look over it later afterwards. You can say, "Hey,
Or
you've
it's
got
their
some
fault,
text."
right? Like, the founder should make it clear, like, hey, I'm giving you this deck 4 days in advance. Read it
Yeah.
beforehand, come with questions or send them before, because like, I don't want to spend the 2 hours we have together, me walking you through the slides.
Yeah. Yeah, exactly. But I think, like, as a first-time founder, that point of advice was so helpful to me, and I'm trying to, even get to a monthly point still seems a little bit ambitious for me, but I'm trying to push myself and say, "Okay, I need to be more transparent. I need to address the pain points. I need to
Well, now
ask for
you got
help."
AI, right? Create yourself a
Yeah.
template and have AI do this stuff for you. I mean, that's like the big unlock, I think, right? Like, I have to do investment memos. We do monthly updates for our LPs.
Mm.
We got an associate on our team, Ethan, who's like becoming like an AI whiz kid and like is leveraging all the latest tools, but like, it's just an efficiency thing. Like,
Yeah.
what used to take hours or weeks, used to take 2 weeks to write an investment memo, go through our notes, our decks, all these things. We write an investment memo in 3 minutes right now.
Jesus.
Half the time, I don't even have to change it. The only thing I don't get is like a sexy snapshot photo of the founder that we're investing in from LinkedIn.
Yeah.
I'm sure we can figure out how to hack that also with AI. But like, I think I've kind of decided nobody's reading these investment memos for the most part anyways, and if they do, I don't know if that little photo is worth the extra time because they can
Yeah.
really care less.
Yeah, so, I mean, just the pace and the scale at which you're moving now is so much faster when you're really using these tools.
I mean, I think I wrote something the other day. The title of the blog post was Code Red 3x to 10x. I think the
Hmm.
best founders we have right now are saying you're not getting 3x out of all of your employees. You're not leveraging AI, and your best engineer should be getting 10x. Meaning, like, everything that they are doing, they should be asking themselves, like, how can I leverage AI to make myself more efficient? Well, it's not about firing people, but like, if they were doing X amount of work right now, how can we do 3x more than that? Right.
Yeah.
Same thing I kind of think about with like where revenue per head count is going. Best SaaS
Mhm.
companies are doing 2 to 300,000 in revenue per head count. Anthropic supposedly is doing 5 million per head count. So if you're going to land somewhere in between, you're going to be an AI native company. Like, you should probably be able to get 1 million in revenue per head count. That means everybody
Yeah.
on your team has to be doing more.
Yep. Yeah, that's a great point. I mean, we've seen a huge just shift in how we operationalize, and I've seen that with a lot of the companies that we work with. Like, you can very clearly now tell the ones that are using the tools and the ones that aren't, just like the pace and the quality. And yeah, you still have to, have a human in the loop sometimes, but a lot of times it's changed so much just over the last 2 years. A lot of the basic stuff, you don't really need to review it as much. Like, maybe spend 30 seconds just checking it, but the information's there and it's clear and it's concise and it's put in the right structure
It's
and
getting
it
better
creates
every day.
benefit every single day. Yeah. So, to talk on a current point, since you mentioned Anthropic, do you have any perspective on the OpenAI versus Anthropic versus US government discussions going on?
I don't really have an opinion. I mean, listen, I think Anthropic, a lot of companies have sued the government and gotten in fights. I think was reading something, from SpaceX to Palantir to Apple. And so,
Mhm.
they're putting their foot down on what they believe in. And I don't think OpenAI is in a position right now to say no to revenue. They need
Mhm.
all the revenue you can get. Their ambitions are they're taking over the world and like they've got to get public and they got to get revenue. I think Anthropic is a little bit more, uh, they're building a company that's already focused on revenue and like a sustainable business. OpenAI, I don't know if it's sustainable at this point, just given like how much cash they need to
Yeah.
do what they want to do. They're also
Yeah.
trying to do everything, right? You think of Anthropic, it's much more B2B.
Yeah.
Um, I think that it'll play out in court for a while. Like, obviously, it'll be a blip on the radar for them on not getting revenue right now. But I think reality is like everybody wants to use Claude. and Palantir uses it, and all these other firms are using it. So to like completely rip it out, I think it's gonna be tough.
Yeah. Yeah. And like, is there even a system in place to say, like, hey, if all these other companies are using that system, maybe they don't have the direct government contract, but they're still getting indirect funding from it because a lot of the companies are using it. So unless all those companies are able to rip it out and the government's able to audit it and prove that it's been ripped out, like it's much harder to do than I think people assume. So, you're also at Third Point, and you worked on a lot of activist strategies there, where like the timing and the conviction were really prevalent. So, can you give a concrete example where like trust or lack of it, like trust, materially changed an investment outcome?
I mean, I think in the activist world, like, we were taking huge positions and changing the board or pushing for structure change. I think lack of trust is almost more like lack of conviction. And so, like, I think a lot of the times you're building a position and then maybe new information had come up and we'd walk away. I also think there were times where we were deep in an investment and whether we could officially win or not by like forcing the board to make changes, we knew that we could force the narrative enough to still win. And so
Hmm.
I think, when we were activists in Campbell Soup, I remember, I don't think we could technically take over the board and win everything we want from a vote perspective. But I think like a win for the family that ran Campbell Soup wasn't a win if like they had a huge vote against it, even if technically they could still win. Right. And so like winning the narrative was still important and still wasn't ultimately a successful thing. And you ultimately settle on something and maybe you're not an activist, you're a constructivist. And so I think information constantly changes and you have to reevaluate at all times.
So, for those that aren't familiar, how would you describe what activist investment actually is?
Well, the activists want to tell you it's called constructivist now, but activism, I mean, it's taking a large enough ownership of a company that you force changes. You might put people on the board, you might force management out. You can make pushes to uh, get out of businesses, spin-offs, take privates, whole list. I mean, when I was at Third Point, they had done Sony, Prudential, Nestle. We acquired Blue
Mm.
Bottle and partnerships with Starbucks. We acted on Campbell Soup. There was discussions with, there's a lot of ones that aren't activism or, weren't officially classified, but there were still like discussions going on in the background with, Disney or Netflix. And I think, Third Point right now is inside a co-star and making changes. If you look at other activist firms like Elliott, they're, an investor in London Stock Exchange right now. I don't think they've yelled their demands yet, but they don't take large positions just to sit around and watch. So, you know, you look at somebody like London Stock Exchange, they own a ton of things, right? Those are
Yeah.
like perfect for activists. They look at the sum of the parts and they say, hey, if we spun out some of those, it'd be worth 10x more. Why is management compensating themselves so egregiously when the stock price isn't going up?
Yeah.
Or, why are they losing market share? Why are the margins in this vertical so much smaller than all the competitors? So like those are the type of things that they think about, and that's where like the opportunities are.
Yeah. So it's really like not activists in an impact or social activist kind of perspective. It's like, hey, there's a shift that this company could make, and we want to dedicate a large amount of money to invest in it to see if we can create that shift.
It's we are an investor and you have a fiduciary duty as the management of this public company to return capital and appreciation for
Mm.
stockholders. And we don't believe that you are doing everything that is in the best interest of the stockholders. We believe you're
Oh, it's very different. Yeah.
overpaying yourself. So like it's much more of that approach, which is
Hmm.
like the way you are running the business as the management team is not in the best interest of us shareholders. And being the largest shareholder, we are demanding changes.
Yeah.
And whether you
That's so
agree to it or
different.
not, we might go to a proxy fight and look to force board changes. And so like it can get ugly.
Yeah. Yeah, so there's like environmental and social activists, but then there's also financial activists.
Yeah, this would be much more on the
And
financial side.
yeah, and I don't think I've actually ever considered it from that perspective. So I think that's really helpful to say, like, what is an activist and what are they standing for? And what market or segment are they doing it in? So it's like the financial activist perspective of like, hey, we're an investor. We put resources into this and we expect certain things to happen.
Yeah, and I
Um,
think that's why they call it constructivist too, right? Like I think like
mhm,
if you have a good working relationship with the management team as the biggest shareholder and they take your insights and find it valuable and want to listen to what you're saying,
yeah,
ultimately they should if we're all after the same thing, which is price appreciation for the stock and help grow the business, right?
yeah, absolutely. Um, so when you decide whether to stay close to a founder long term, are there specific behaviors that tell you that the trust is there between you and that founder, even if things are going badly?
I mean, listen, I think we sign up for a 10-year journey with our
Mhm.
investments. We tell fucking founders, it's a 10-year fund with extensions. We know that,
Yeah, so it's not a
great
3 to
biz,
5 year exit that you're looking
great
for.
businesses take, I think Robinhood took 9 years to go public. If you
Wow.
focus on QSBS, which is an important thing for us as investors, the qualified small business tax, like that's 5 years to fully get that. Now you can get partial, but so like to get the full tax exemption on an investment, it's 5 years. So that's kind of the minimum. Think about a J curve of investing where like you put your money in and it kind of goes down and then straight up.
Mhm.
Over time as they invest and find product market fit. It's a 5 to 7 year journey to get to that.
Mm. Yeah, so that's really the difference in, an early, like, angel pre-seed seed investor and a long-term, like, private equity play is the time span and the amount and the way the expectations are very different.
Yeah, we're a long term. You give us your money. We hope to return some sort of cash in 5 to 7 years, but it could be 10 years for the best outcomes. Whereas
Okay.
if you're a
What
late
stage do
stage
you
fund,
typically come in for that?
seed, but maybe people will call it pre-seed. Like, we want to see a little bit of revenue and some clients and a product, but like it doesn't have to be
Mhm.
perfect. Like it could be 50,000 in revenue. It could be 1 million in revenue.
Oh,
So
wow.
we're pretty early.
Yeah. Okay. Is there a target, like, for the rounds that you invest in?
I think our sweet spot is a 4 to 8 million post money valuation where we put in anywhere from $1 to $2 million. So, minimum 10% ownership. And
Okay. Yeah.
depending on the size of the check and the valuation, could be much more
Yeah.
than that.
Okay. That makes sense. So then looking at those companies that you are involved with now through social leverage, are there any like trust related problems that you see repeating that you think the next generation of operators need to consider or solve differently?
I think it's like I said earlier, it's like communication is the most important thing. Like,
Hmm.
we are investors. We're not, we're friends with a lot of the founders, right? At the end of the day, we're not like your best friend. Like this is like a business. We gave you money and
Yeah.
like we have a fiduciary duty to our LPs. So like if we're gonna invest, like we're not just gonna give you money and you can just do whatever you want with it. Like our investors have expectations too. So, same thing when you run out of money and you need to raise more, like we have to do what's best for the people that whose money we're managing.
Yeah.
So
Absolutely.
this isn't a I like you or don't like you or I believe in your business or I don't. It's I have to underwrite the belief that I'm getting enough return on the money that it makes sense so I can justify it back to the people that have trusted us.
Hmm. Yeah, I mean that brings up a good perspective that I don't know if I've ever went into with anybody. We've talked a lot about founders and just like as an entrepreneur and like being early in a lot of these processes, what you've had to learn and how you've had to build trust in yourself. But as a firm, how what does that trust with LPs look like? Like how do y'all build those relationships?
It's a lot. I mean, listen, returning capital is the best way to build those relationships, right? DPI is their best friend, right? I think
Okay.
my partners, Howard and Tom, and then Gary joined, like our first two funds have, multiples of DPI. So like
Hmm.
top tier percentile in terms of like returning money. So I think that's obviously important.
Yeah.
The LPs want to get updates. We get monthly updates, quarterlies. We do an annual event. We do multiple events throughout the year. they want to hear what's going on. Just like us, they want to hear about the good, the bad, and the ugly,
Hmm.
right? They want to know that we fought till the very end for things that didn't work out well, and we fought till the very end for the ones that went well, and we got, a little bit extra because we, put in that effort. So
Yeah.
I think that's
So
what's
they want
always
to follow
important.
your journey. They want to see consistency.
Yeah.
Consistency is, I think, the biggest thing that kind of sticks out there in this
They
conversation.
want clear communication. And I think also for them, they want you to do what you said you were going to do. We do
Yeah.
fintech and vertical SaaS, vertical AI is 90% of the portfolio. And there'll be a few things in the portfolio that you'll be like, that's a little bit weird. We invested in Manscaped or, we did some consumer things. But that's like, we've told people that's what we do, right?
Yeah.
If we go out and do a biotech company or we buy
You're
a
like, where did
hotel
this
in
come from?
Panama, they're going to be
Yeah.
like, what is this? Like, I signed up because you guys are great fintech investors. You've done everything from Robinhood to eToro to starting StockTwits to, you know, compliance companies like Archive Intel or data companies like Fiscal. You show up
Yeah.
and you're investing in a company that makes, robotic vacuums. You really got to give us a good story on why you're doing that. Otherwise, it's kind of outside of your expertise.
Yeah. Is there some kind of data play here that we're not seeing, or like what's the thing that makes it fit?
Right. And like, listen, every good investor might take a swing at something that, is more expensive than you want or a whole bunch of different things. But
Hmm.
I think like sticking to what your expertise is and what you say you're going to do is, important to not drift.
Yeah. Yeah. Absolutely. Um. So consistency, communication, and just deliver. Like if you say you're going to do something, do it, stick to it. And if something happens that stops you from achieving that thing, just talk about it. Don't be
Yep.
afraid to be clear and transparent about the hard things and the good things, and your investors will be there for you on both sides of it. So closing out, then I've got our one last question that we always ask here, but I really believe there's a significant difference between being well known and being known well. So to close this out, is there anything that you want anyone who may listen to this to know about you so they can go forward feeling like they know you well?
I think for us, we are an open book. We're pretty transparent, right? So
Hmm.
you get what you get. I think how I write my newsletter is how I speak and what's on my mind, right? When I post
Yeah.
on LinkedIn is the same way. We're not using AI for our own content. So I think we're a pretty open book as a firm, we're pretty transparent with our investors. And I think with founders, we're going to get involved if we can roll up our sleeves and help on a daily, weekly basis. We're not trying to run your company, but at the same time, like we're not giving a check to somebody and hoping and praying and showing up in 10 years at the finish line, right? Like we
Yeah.
kind of want to will our way to success with the firm, with the founders.
Yes, you're very active and you want to be there and you want to be in it. You don't want to just give them the money and say, all right, let us know next year how it goes.
Yeah, I'll give you an example. Like one of the guys on our team is at a wealth management conference right now, which is really like a B2B vendors conference. And he's there walking
Mm,
the floor with a couple of our companies, introducing them to his network because he was a past founder. I think he texted me last night and said, there's not a single venture capital person here because like you're not there to raise money. You're not there to like meet companies really, but like we're there to will our companies to success. Right. And
yeah,
being like, hey, we have a network of
man.
people that they don't have. We'll walk the show floor with you.
Yeah, I mean, that's a level of support that I don't know if I've talked to any investor that they would give out or like even discuss.
Yeah. I mean, I think, listen, it's a lot of hard work, but I think flip side of it is like, it's exciting to watch when you can like really make significant change and help for a company, right? Like I love
Yeah.
when I make a sale for one of our companies. I'm not getting any commission, but like write my name up on the big board.
Yeah. Yeah, exactly. You don't get the commission, but like you've got the equity, you got the investment.
Yeah,
So the more effort you put into it, the higher chance there is that it's going to pay out in the long run.
exactly.
Yeah. I mean, I really appreciate that kind of sentiment. And I mean, like I said, I don't know. I've talked to, I don't know, 150 plus investors and VCs and et cetera over the last 3 years. And it's really refreshing to know the level of support and like involvement that you have with your investments. So Matt, thanks for taking the time today. It's been a very different discussion, just like on a different kind of understanding of data and markets that I typically get to have. So I appreciate you taking the time today. If you got anything else you want to close out with, how can people, follow you, where your blog's at, if they're founders and they would like to apply for funding for you through a social leverage, what does that look like?
Yeah, you can find us on socialleverage.com. We actually have a new website, and it's very easy for founders to submit their deck and their information. I mean, the best way to get a hold of us is warm introductions, right? I think like those hit the top of my inbox and we take more seriously, but like we look at
Hmm.
everything that comes in cold. And, I think just the other day we saw something interesting and we're setting up a meeting. So it's definitely actively being monitored, but you can imagine we're kind of overwhelmed on the cold stuff. And 99% of our investments come from some sort of warm introduction.
Yeah.
Um, we're active on LinkedIn. I'm on LinkedIn. I also have my newsletter at mattover.co. So like, uh, great way to find out what we're doing, what we're thinking about, what interests us, and pretty easy to get a hold of us.
All right. Thanks for your time, Matt.
Thank you.
Thank you for listening. If you're enjoying the show, make sure to subscribe on Spotify, Apple Podcasts, or wherever you listen, so you don't miss what's coming next. If trust is at the heart of your work, whether in sustainability, business, governance, or personal leadership, I'd love to hear your story. Reach out, share your thoughts, or tag someone who should join the conversation on our socials. Let's shape the future of trust together. Until next time, thanks for listening.